Almost an hour into the trading session, and it's another day of selling for the major averages. We have really seen a tumble over the past week or so with just a little bit of a reprieve. And today we are not seeing the depth of the selling that we have seen as of late. But of course, investors are still processing the inflation report from yesterday on the consumer level, the wholesale inflation report from today, and what the Fed's going to do about all of this. Let's bring in someone to talk about today's market action and what people should be doing about it. Momentum Advisors CIO Allan Boomer is with us now. And Allan, as you said in your notes to us, you cited the oft quoted adage about the market, you should step in when there's blood in the streets. How should investors be stepping in here? Should they? I mean, it certainly feels like there's blood in the streets when you look at these markets. Where can people be looking for opportunities here?
Great. Well, thanks for having me. And unfortunately, there's all types of blood. You know, look at what's happening in Russia and Ukraine. That's actual blood. And then you've got financial blood that's being poured every day. And it's a scary time. Last night, I was just telling the story to my younger analysts who never lived through a bear market before, what it was like in 2008 and how scary it was. And I told them literally, there were days when I would go outside in my office building and just make sure the sun was still shining, you know, because it would really feel like there would be no tomorrow in some of those days. So if I were giving advice to investors today, I think the biggest thing I'd say is, look, you've got to understand that the stock market is going to go up and down. It's going to overreact to good and bad news. But it's really important to look at the data and make decisions that are steeped in data. And one of the data points, I mean, there's so many positive data points that are being overlooked in this market. You know, number one, you've got really strong earnings. I know everyone's saying that earnings growth has declined. That is true. A lot of the forward guidance is a little, you know, less strong than what it's been in the past. That is true. But at the same time, earnings growth is still positive, and earnings growth really is the engine that drives the market in the long run. So that's number one. Number two, I look at consumer confidence as a really, really big indicator. It's kind of a contra indicator, meaning when consumer confidence is high, that's a time to sell. When consumer confidence is low, that's a time to buy. And when I look at consumer confidence, I see that it's in the 50s now, high 50s. The last time we had consumer confidence this low, 2011. What happened after that? Really strong markets. November of 2008, a few months before the bottom. And again, if you were to look at how does the market do when consumer confidence is low, on average, positive 24% returns off of the lows of consumer confidence, versus when consumer confidence is high, on average, you get 4.5% returns in the next 12 months. So again, I am positive, I'm cautious, but I'm positive. And I do think that investors should be looking at the data and making some decisions based on the numbers, not just the emotions that are being shown in the stock prices right now.
Which sectors do you anticipate will be most beneficial from that data?
Good question. So I think you also have to think about diversification, right? And I think a lot of folks have gotten really heavy on growth stocks. And I think now is a great time to be thinking more broadly about being diversified into value and thinking about areas of the market that you've been underexposed to. And looking at our own portfolios, two areas that really stand out would be natural resources and food. And when I say food, I know we had a restaurateur on earlier. I'm really talking about the actual food, like getting as close as we can to the commodity. You know, so some of the things that I'm looking at doing, again, this is adding diversification. This is giving us new exposure that we were really underappreciating in the past. I'm buying ETFs like the ticker VEGI, Veggie. Veggie is really a grouping of food producers, companies like Bunge, companies that are doing things like creating, agricultural elements, things that are used to produce corn and vegetable oils and things like that. These are overlooked parts of the market that have done well this year that I think have room to grow still, even in a really difficult environment. Beyond that, I'd also say take a look at companies that are trading at really low valuations, but have done a good job of holding on to their margins and a good job of producing earnings in the past.
Allan, the FANG complex has fallen really, really hard. Most of these stocks are down more than 50% compared to their 52-week highs. Are some of these stocks now once-in-a-lifetime buying opportunities?
I think so. And I think you've got to look at the FANGs individually. You've got to dissect them. You can't buy them all because they rhyme, right? Or because you can put it together into a cool acronym. I really like Google. Google right now is trading at 19 times earnings. That's a really good price to buy Google. You're buying at a multiple that's very close to the market multiple. You're buying a company that has really done a great job of growing earnings consistently over time. You're buying a business that has some pricing power in the marketplace. And again, they're in the technology space, which means they're not as exposed to some of the worker shortages that we've seen. Right now, I think there's a big opportunity as privacy laws are being revamped. It's creating volatility in shares like Meta. I think Google is one of those stocks, or Alphabet is one of those stocks that is overlooked, but really is one of the strongest members of the FANG complex.
Momentum Advisors CIO Allan Boomer. Thanks so much, Allan. Appreciate it.